Hey, Peter.
Hey, Sema, man. How have you been?
I've been good, bana. You know, just business like this. Imagine I managed to find some part-time work and I've cut down on my expenses. So in a month, I've saved karibu 5K.
Hey, in a month? Wow, that's fantastic. Have you selected a bank?
At a bank? No way, bana. You know, I like to put my money in a spot.
Well, remember, Wasi, the best way to earn interest from your money is to keep it in a bank.
For what?
Well, banks are probably the easiest and most convenient way for you to earn interest on your money.
I know, Peter, but you know, I like knowing I have my money chap.
Slow down, Wasi. The banking system has evolved tremendously over time. I mean, banking today is just as easy as keeping money under your mattress.
Hey, wait. Ngoja. How did you know that's where I put my money? Did my mom tell you? I told her to stop touching my bed when she's in my room.
It was just a lucky guess, Wasi.
No. I'm moving my money. I'm moving it tomorrow.
Come on, Wasi. Let's go grab your money and check out a few banks. We can probably even get you set up today.
Sawa, Peter, but they better not lose my money.
Oh, Wasi, trust me. It's the way to go. After all, mattresses do catch fire.
Where watcha?
Wasi, welcome to the bank. A bank is a financial institution and middleman that accepts deposits and then lends those to other customers. It is the connection between customers that have extra money and those that require more money, like you. Because banks play a major role in the economy, they have to follow extremely tough rules. All banks are required to obtain a special license to operate, and most are required to hold a minimum amount of cash, also called a minimum capital requirement. Make sure that you select a licensed bank or other financial institution. Before we explore the bank, let's learn more about how your government has ensured your money is safe. The Central Bank of Kenya, CBK, has the responsibility of formulating monetary policy, promoting price stability, issuing currency, and performing any other functions conferred on it by an Act of Parliament. So, what does this all mean? The CBK formulates and implements a policy to control the country's supply of money with the goals of promoting economic growth, achieving low unemployment, and maintaining stability in the general level of prices. The following are selected roles the CBK undertakes to ensure a stable financial system. Acts as a banker and advisor to the government, manages interest rates in the country, regulates the issue of currency notes and coins, formulates and implements foreign exchange policy, reviews and develops appropriate laws, regulations, and guidelines that govern the players in the banking sector, facilitates the introduction of initiatives that promote enhanced financial inclusion. Financial inclusion is the delivery of financial services at affordable costs to sections of the population who are not traditionally served by the financial system. Kenya Deposit Insurance Corporation, KDIC, is responsible for carrying out regular checks on banks to detect risks and to prevent financial institution collapses and loss of customer deposits. It's very rare for a financial institution to collapse, but the KDIC has created a system that follows international best practices to ensure the customer and investor are protected. Currently, the deposit insurance coverage is up to 100,000 shillings, but there are plans to increase this figure. It's always wise to understand how much of your money is insured in the event a financial institution does collapse. Let's run through a quick example. Suppose you had 80,000 shillings deposited with a particular bank, let's call it Belly Up Bank, and the institution collapses. The KDIC will guarantee you receive 80,000 shillings. Another organization to know is the Kenya Bankers Association, the KBA. This is an industry organization that represents the interests of the banking sector and its stakeholders. The members are comprised of Kenya's 40-plus licensed banks. Since inception, the KBA has steered the growth of the banking industry, as it has undertaken major initiatives and worked with sector regulators and government entities towards developing and modernizing standards for the banking industry. Now that you can see your money is in safe hands, let's understand how to select the right bank. There are many banks to choose from, so how do you select the one that is right for you? Here are some tips on selecting a bank. Find out the number of locations in your area, both for branches and automated teller machines, ATMs, as well as their business hours. The last thing you want to do is select a bank that is inconvenient to access. Courtesy and customer service reputation. It might be helpful to ask family or friends about their experiences at a particular bank. Also, it's important to see how they treat you as you're trying to set up your own account. If you feel the customer service is not to your satisfaction, do not hesitate to stop the application process. Whether you're a student, employee, retiree, or businessman, ensure they have the right bank account for you. Watch out for hidden fees and promotional rates that expire. Check to see if a checkbook is provided at no cost and whether there is a limit to the number of free check transactions allowed. Does it offer phone banking, online banking, and online bill pay? If so, what are the additional fees associated with the options? Once you have a better idea of the services and fees associated with each bank and the services you require, you'll know which bank is right for you.
Hello.
Hello.
Hi. I hear you're interested in learning more about the accounts you can set up.
Yes. Tell us more.
Well, I'll review four types. Savings account, current account, fixed deposit account, and a call deposit account. Let me walk you through our variety.
That'd be great.
Savings accounts are often the first official bank account held by consumers. Children may open a savings account with a parent to begin a pattern of saving. Teenagers open savings account to stash cash earned from a first job or household chores. The majority of Kenyans use a savings account to park emergency cash. Opening a savings account also serves as a way to establish a working relationship with the bank. The drawbacks of a savings account is that it typically yields a lower interest rate in comparison to fixed and a call deposit account. Typically, it does not come with an ATM or debit card for purchases, and the number of withdrawals per month is limited. Current accounts provide the consumer with a basic account to deposit checks, make withdrawals, and pay bills. Paper checks, which is slowly losing popularity, are issued from current accounts. Banks may also offer online bill payment services through current accounts, helping to streamline payments. So who is it good for? Anyone who regularly needs quick access to cash. The drawbacks? Current accounts are subject to a variety of fees which can become expensive quickly, and current accounts typically do not earn interest. Many current accounts charge a maintenance fee or require minimum balance. Options vary widely from bank to bank. A fixed deposit account, sometimes referred to as certificates of deposit or CDs for short, are debt instruments issued by banks and other financial institutions to customers. In other words, in exchange for lending the institution money for a predetermined length of time, for example 1 month, 6 months, or a year, you, the investor, is paid a set rate of interest. Fixed deposit accounts can range from only a few weeks to several years, with the interest rate earned by the investor increasing in proportion to the amount of money invested and the time his money is tied up in the investment. The pros: the investor can easily calculate his expected earnings at the outset of the investment. It's great for investors who don't otherwise need access to their money and can commit to the length of time of the investment. The cons: if you choose to withdraw before the maturity, you'll lose any interest earned on the account, and you may have to pay an early withdrawal fee. A call deposit account, or sometimes referred to as a money market account, earns a higher interest rate than either a savings or current account, but combines features of both. For those who tend to carry higher balances in their savings or current accounts, this can be a great option to park cash. The higher rates mean the cash is working for you. It's good for people who tend to carry a higher balance in their savings or current account and are seeking higher interest rates. The drawbacks: call deposit accounts may have minimum balance requirements. Also, the interest earned on the account may not be fixed. Therefore, it may fluctuate depending on the market conditions. Also, keep in mind, there are limits on the number of withdrawals and transactions per month.
As you're selecting the right bank and account, be aware of the hidden fees associated with the accounts. A hidden fee is an expense not normally included in the price of the service. Here's a list of some common fees you may be charged. Keep an eye out for additional fees. Early account closure fee. Many banks require you to have your account open for a certain period of time before closing it, or else you may get slapped with a fee. Monthly or annual maintenance fee. A number of banks charge monthly or annual maintenance fees for certain accounts. Minimum balance fee. Some banks charge a monthly fee for customers with low account balances. Returned deposit fee. If you deposit a check that bounces, your bank could charge a fee. A bounced check is short for a check that cannot be processed because the account holder has insufficient funds. Lost debit card fee. If you lose your debit card, it'll cost you. Paper statement fee. If you haven't switched to online banking, you may be charged extra for receiving paper statements. Overdraft fee. Occurs when money is withdrawn from a bank account and the available balance goes below zero.